The war continues to escalate with over 900 Israelis and 700 Palestinians dead so far and hundreds in hospital. We continue to track the impact of trade and on trade relations between India and Israel. Remember, total India-Israel trade in merchandise and services sector in 22-23, which is financial year 23, was estimated at $12 billion. India's exports and imports from Israel during this time was $8.4 billion and $2.3 billion respectively, leading to a trade surplus of $6.1 billion. Is the trade going to be impacted in any way, and what are the immediate implications for both these countries involved? Let's talk about that. Joining me is Krishna Kumar, my colleague here in the Newsline studio. Also joining us is Bidisha Ganguly, Chief Economist, CII. Bidisha, let me come to you first. Thank you for joining us. Thank you for taking time out. I think the first question that comes on every person's mind who's watching all these developments is what's going to happen what's going to happen as far as trade relationships is concerned? Is there any immediate impact whatsoever? And if yes, in what areas specifically?
Yes, there will be an immediate impact on exports. Certainly with Israel in its current situation, normal economic activity and trade relations will get suspended for some time. But I think the bigger worry for India is on the oil price front, where there has been a slight reaction in the oil market because there is a war price premium that is now being seen, although that is not significant. But we will have to keep a watch on where oil prices move and what are the developments in West Asia.
All right. The one thing that comes to the top of my mind right now is that India's inflation picture is just about cooling off. We're coming off those food inflation highs. We're getting into that range of 4% plus or minus 2%, which is a comfortable range for us. And we were hoping that crude prices will settle on the lower end of things. But it looks like those hopes have been completely blown away by this rise in tensions, this conflict that's raging on in Israel and Palestine. And my point here is that how do we look forward to maintaining our own inflation targets in an environment like this?
That is what I was saying, that this is a major worry, and crude prices were falling because we were concerned about the slowdown in the global economy, China slowdown, etc. That was bringing down crude prices. Although there has been a supply cut by Saudi Arabia and OPEC Plus, that had driven up crude prices earlier, but because of the concern on the demand side, it was coming down. But now this West Asia conflict has driven it up. But I must say that, given that Israel and Palestine are not oil producing states and the war is right now limited to these two areas, so, the kick in oil prices is not that much. If the war spreads to, say, Iran comes in or the Saudi comes in, then that is a cause for concern. As of now, I think it is still, it's only a marginal increase in oil price that we are seeing.
All right, and a marginal increase, but a volatility like no other.
Yeah.
Not seen in the recent past couple of months.
Right.
A $5 increase, a $5 decrease, and again a $5 increase is what we've seen. Now, Bidisha, if Iran is involved, and the possibility of Iran's involvement is now very likely, and it gets into the war actively, not just through Hezbollah, then what sort of impact are we expecting on crude oil production specifically?
So it is not just production. I think Iran is not that important in terms of production, but Iran could take steps like, blocking the Strait of Hormuz, which it had earlier threatened to do, and a lot of oil passes through that region. So transportation is a concern. I think that would be really a worst case scenario, which we are not looking at right now.
Okay. Now, since we're talking about a supply chain disruption, I want to understand what sort of immediate impact are we looking at? The conversations around a IMEEC corridor, an economic corridor, it looks like, you know, that conversation is halted at least temporarily.
And that just began. And that just began.
Just began
in
on the
G20s,
sidelines.
when on the sidelines of G20, when the IMEEC corridor, and you're talking about India, the Middle East, and Europe being connected with one corridor, and Middle East being the central piece of it. And there you go.
I mean, these are long-term visions. So I don't think a stoppage for a period of time will really affect that vision. It will still stay, and it will come back, I think, soon enough. We should not think that the IMEC is now put on hold for a long period of time. I think that will still come back.
Okay, but an I2U2 partnership, Vidisha, the partnership that US was trying to broker, a peace that US was trying to broker between Middle East and Israel, at least that has passed. It will take a very long time to reestablish, you know, an I2U2 sort of partnership where you have a happy and a peaceful Middle East working in coordination with Israel.
Right, absolutely. And in fact, it is being said that, you know, Hamas actually created this issue because it was not involved in that peace process. It is a major issue. The other thing is that, you know, Saudi had agreed to reverse its oil production cuts if this peace process went forward. Now it's unlikely to do so. And so this slight increase in oil prices is likely to remain for a while now. We are not going to see that reversal and normalization in oil production that we were expecting, which is why oil prices had also moderated. So that is now not on the cards.
All right. Vidisha, let's assume that oil touches $100 a barrel in coming few weeks. What sort of immediate impact are we looking at as far as inflation is concerned in the US and in India?
Well, certainly prices go up. About India, and see, US is more self-sufficient actually in oil production. It has its own production facility. They are into fracking, so they have they are able to produce oil, so they can probably kick that up. Whereas in India, it will cause a problem because we are entirely dependent on oil imports. So unless Russia comes to our rescue again by providing low price oil, but I don't think that will happen. So we will see an uptick in inflation.
All right. The question I want to ask is this: whenever war happens, it's the balance of trade in the world that really goes for a toss. In the globalized world that we live in, one corner of the world has a war. There's a global balance that is at a threat over here. Look at what happens when in a volatile situation, war-like situation, people start investing more in safe haven assets like gold. India ideally would like to import less gold to make sure, our current account deficit remains, in safe territory. Talk to us about that kind of ramifications to the way the balance of economy, balance of Indian economy gets thrown off course because of a war situation.
And just to add to that, India has a trade surplus with Israel to the tune of about $6 billion. What sort of impact will that surplus have on Indian economy if that goes for a toss?
So that too, your surplus with Israel goes down, the oil imports go up, so all of it will lead to a higher deficit. And this typically oil price increase also has an impact on growth. Today we are the fastest growing economy in the world. That may not last. So that 7.8% growth that you saw in the first quarter, it is expected to moderate through the year, but it may moderate much more than expected. That is the fear with a...
All right, just to double check on what you're saying, are you telling us that this could probably have an overall impact on India's own GDP numbers for the current and the upcoming fiscal?
Well, oil price hike is typically has an impact not only on inflation but also on growth. That's a established relation that we have seen over the years.
All right. So a rising import bill is not going to augur very well for India. That is for certain. But, as far as a prolonged inflation is concerned as a result of oil prices, higher for longer. That's the rate cycle we're looking at in the US. What is the probability of that continuing here in India? Given that we are in an election year, elections, in fact, the dates for elections for states have already been declared by Election Commission. You know, with all that election hullabaloo around us, what sort of rate regime are you looking at?
These elections plus war now.
So we had the RBI announcing its monetary policy a few days back. And although they did not increase rates, and that I don't think is warranted given that the inflation trajectory right now is on a downward trend. Food prices have been coming down. Clearly the tone was hawkish, and the governor made it clear that their inflation target is 4%. It's currently still above 6%. So they will not be happy to just to bring it down to 6%, which is the upper limit, but they will want it to go down to the 4% target. So which clearly means that the higher for longer scenario is relevant in India as well.
Okay. And you know, the inflation numbers for the month of September are not out just as yet, but we were discussing just prior to the show, and my colleague Suyash here said that analysts and experts are expecting an inflation to the tune of 5.4%.
Yes.
That is quite within the 4 plus minus 2% range, so comfort zone of RBI. If that happens to be your own estimate as well.
Absolutely. So that's what I was saying, that even though it's on a downward trajectory, it is still above 4%. And so, you know, we do not expect it to come down to 4% right now. That is the objective, to bring it down to 4%. And therefore, although I don't expect a rate hike right now, but it's the higher for longer that is relevant.
All right, so higher for longer, that is the expectation, and inflation there likely to be contained in the next, at least in the last month gone by. But for, you know, overall quarter gone by, what is the estimate that CII and you, Vidisha, are making as far as inflation is concerned? What sort of Q2 expectations of inflation? What is your estimate?
And also projections for the upcoming quarter, considering the situation we find ourselves in at this stage.
So we haven't yet made quarter by quarter estimations, given that the war has broken out and there are a lot of uncertainties around. But for the full year, I think the average is likely to be around 5.4% is what the RBI is saying. I think it could be slightly higher at 5.6 or 5.7%.
Okay, 5.6 and 5.7%, that of course is the estimation. But Vidisha, you know, before I let you go, an important conversation that we had yesterday with jewelers through the day was the impact that the ongoing war is going to have on precious metals, diamonds specifically, because we import, you know, rough diamonds from Israel and give them finished diamonds. That industry is already hurting under, you know, a lot of pressure, low demand, and a very strict high interest rate regime, not much discretionary spending, so not many people buying diamonds per se. But with the ongoing war now and unabated for last 4 days, what sort of impact are you looking at as far as you know, precious metals is concerned?
So precious metals, I mean, there'll be, I would expect different impacts. Gold, and from the demand side, you're talking about the impact on the diamond industry. Yeah. So, I mean, and that's not just limited to Israel. We export diamonds to the entire world. There has been demand compression everywhere. So that will be affected, not just due to the war, but mainly due to the rise in interest rates. And gold also, typically gold prices fall when interest rates move up. But however, there is a safety premium which is attached to gold during periods of you know, disruption, war, etc. So I would expect gold to remain at current levels, not a big increase or a decline.
All right, gold likely to remain at current levels, not likely to decline anytime soon. That's the word coming in. We've spoken to 2 experts since morning. So if you're hoping to buy gold, now is the time. Vidisha, thank you very much for taking time out, ma'am. Thank you for speaking to News 9.
Thank you.